Welcome to today's stock market news update. Let's start with news from the electric vehicle sector. A CNBC article says Tesla reported a 7% increase in vehicle deliveries for the third quarter of 2025 compared to the same time last year, reaching 497,099 units. Production for that quarter came in at 447,450 vehicles. This update came on the same day a major tax credit for electric vehicle buyers in the United States ended. After the report, Tesla's shares dropped more than 3% on Thursday. These delivery numbers could influence investor views on the company's growth in a changing policy environment. Shifting to another big player in electric vehicles, a CNBC article reports that China's leading electric vehicle company, BYD, saw its monthly sales drop for the first time in 2025. In September, they delivered 393,060 units, which is almost a 6% decrease from the year before. This happened even during the busy season for car sales and follows reports that BYD cut its sales goal for the year by up to 16%, aiming for 4.6 million deliveries now. The drop points to tough price competition in China's market, but BYD still held over 54% of total electric vehicle sales that month. Such trends could signal broader challenges in the global electric vehicle industry. Moving on to a major business deal, a CNBC article states that Warren Buffett's company, Berkshire Hathaway, agreed on Thursday to purchase the petrochemical unit of Occidental Petroleum called OxyChem for $9.7 billion in cash. This is Berkshire's biggest acquisition since 2022, when it bought an insurer for $11.6 billion. The company has a record high cash pile of $344 billion right now, and it already owns a 28.2% stake in Occidental as of late June. Deals like this could affect how investors see opportunities in the energy and chemical sectors. Now, let's look at some thoughts on inflation from a key investor. A Yahoo Finance article quotes Ken Griffin, who warned President Trump and the Republican Party not to overlook how annoying a 3% inflation rate could feel to Americans. He told CNBC on Thursday that American voters are tired of inflation and that frustration helped bring the president and Republicans into power. Griffin stressed that even a steady 3% inflation rate could bother tens of millions of households. Comments like these could shape discussions on economic policy and its effects on markets. Next, a comparison of retirement situations across countries. A Fortune article highlights that in France, 65-year-old retirees now have higher incomes than adults who are still working. This comes from France's early retirement age, big government spending on pensions, and high rates of replacing work wages with pension income. Officials there are trying to make changes that people don't like. In contrast, older adults in the United States and the United Kingdom are often going back to work because they can't afford to retire in today's economy. Finally, an update on how a government issue is affecting key economic data in the United States. A Reuters article explains that the federal government's 15th shutdown since 1981 has put about 750,000 workers on temporary leave without pay. This has delayed the release of important reports, including the September unemployment and jobs numbers from the Bureau of Labor Statistics, which were due today. That data is a main guide for Federal Reserve leaders who will meet in about 4 weeks to decide on possible interest rate cuts. Delays like this could create uncertainty in how markets react to upcoming policy moves. That's all for today's video. Stay tuned for more updates and don't forget to subscribe.